Hello and welcome everybody to another review video. We're going to be talking about EuroCat this time, 13th of October 2023, how we made $4,000 on a 300k live funded account and only risking 0.5%. So let's go to the dashboard first of all. So we've got that fresh funded account, that 300k account, which we had in the last video, right? The phase 2 challenge pass. Over here we got the equity plus $4,000, and here's the equity curve as well. So I want to emphasize on a little bit of a risk management. When you have a fresh account, we like to risk 0.5% to gain a 1 to 2, so you make 1% on the first trade of that fresh account, and then you wait for the payout. And why do we wait for the payout? Because the account is risk-free at that moment, and you also get that refund, right, from purchasing that challenge. And afterwards, when you get that refund and your first payout, then we like to risk 1% and go for a 1 to 3, which is $9,000 on a 300k account. And it's like 3% is $3,000 on a 100k account, and so on and so on. So over here we've got a Euro Canadian dollar daily chart. I just want you to look at this chart quickly and figure out for yourself what you are seeing on this chart. So first of all, what we always do is draw out our correct dealing range, right? So we always want to be a seller in premium and we always want to be a buyer in discount. So drawing out that correct dealing range over here, right? We've got a buy side rate over here, which makes the high of this dealing range, and we've got a sell side rate down here. So we have the low of our dealing range. We want to be a seller in premium, right? So we tapped premium over here. Now that we have our correct dealing range, we want to go over that PD array matrix, right? So outlining the PD array matrix, we've got a daily bearish premium fair value gap. And just notice quickly how this fair value gap is both in discount and premium, but how the wicks are going in premium before declining, right? So if you're uncertain how to approach a fair value gap, if it's lower in the range, and in this occasion you can see it, right? We have a part of it which is in discount and we have part of it which is in premium. Be patient and wait for it, or have your limit in the premium area of that fair value gap. Bearish fair value gap is being respected. Now we have an inverse fair value gap over here, which is being disrespected. So when a bullish array is being disrespected, what does that tell you? It is a change in the state of delivery, right? So we can anticipate that price action will go bearish because we disrespected that bullish array. So over here we've got a fractal dealing range as well, right? We've got this low into this high. Why is this high good? Because we took out buy side liquidity once again, and we're going into a premium higher time frame level, right? And the low is down here. So it makes sense that this is our new dealing range and we want to aim for discount. What is our target? We've got some relative equal lows in premium, which is sell side liquidity, right? We got this low down here, which is relatively equal to this low down here. So now we've got a nice target. We've got our dealing range and our draw on liquidity has been set. After you hit a premium array or a discount array, the best thing to do is to see if there's a swing high formed inside that array, and you can capitalize on the fourth candle after that swing high or swing low. So we can see a swing high form over here. So we are definitely respecting that premium fair value gap, right? And we're focusing on that fourth candle over here, which targets those relative equal lows in premium, which is that sell side liquidity. Over here we've got a 1 hour chart. So let's break this down real quick, right? On the left over here we see that inverse fair value gap, right? That is that bullish fair value gap on the daily time frame, which has been disrespected. We've got a nice liquidity rate up here, and then we're breaking down structure down here, right? So we have a break of structure on the 1 hour. We have a draw on liquidity, which are these relative equal lows. Again, always draw out your correct dealing range first, right? So we've got this high down to this low, and then we have a premium fair value gap. Again, just like on the daily time frame, we have one on the 1 hour time frame. because price is fractal, remember. Everything which happens on the 1 minute also happens on a monthly and on a weekly and so on and so on. So we hit that premium fair value gap over here, and we have another break of structure. And remember, this is Thursday, right? And we're focusing on Friday. So we're focusing on this expansion down here. We've got that break of structure already, then a retracement back into premium, and then we're leaving inefficiency behind, a CB, right? Sell side imbalance, buy side inefficiency, and that is a great opportunity to go short from. We're zooming in a little bit more. So important, always draw out your New York midnight opening price, right? The 12 a.m. EST. We draw it out over here. You want to be ideally a seller above it and a buyer below it, depending on what your directional bias is. You can also capitalize on it once it has traded above that New York midnight price again and then declines depending on the session, right? Because with Asia session being a consolidation, you can most of the time see London session create a manipulation above that New York midnight opening price, and there will be a New York continuation if it's a classic sell day. So it doesn't matter if you then are below that New York midnight opening price, as long as we had a manipulation phase beforehand. So break of structure down here, right? This swing low has been taken out down here. We have a bearish order block resisting price lower. This sets the stage for a sell program. Now, always look at the economic calendar, right? What kind of news are we having on that particular day? With high impact news on that particular day, you can expect some volatility and some movement. If there's no news at all on a day, you're probably not going to get a big expansion. However, we had pound news. The Governor Bailey was speaking, and we also had President Lagarde speaking. So that sets the stage for a probable larger expansion for this day. So outlining again, the premium arrays, right? The PD array matrix, always use that. We've got a imbalance over here, the 1 hour fair value gap. The bearish one, we can see price wicking up all the way into the CE. And also note we have an inverse fair value gap down here, right? Once a bullish fair value gap has been respected, you can expect that to be used as a resistance as well. So we can see price is price is resisting this area as well. So we have two confluences already that this gap is likely to hold. So now I want to go over that New York session based open, high, low, close, right? We're going to go over 4 points. First of all, we're marking out that 7 a.m. opening price. Why are we marking out 7 a.m.? If you think about the kill zones, New York kill zone is 7 a.m. to 10 a.m. EST. Second of all, we're going to identify the premium array above that 7 a.m. opening price. Why are we going to do that? That's point number 3. Wait for that market protraction or manipulation above that 7 a.m. opening price into that premium array. So this sets the stage for an AMD, right? That accumulation, manipulation, distribution. And then we're going to execute the entry model. So over here we've got, again, that 5-minute time frame Euro Canadian dollar chart outlining that 7 a.m. opening price right over here. Start of New York kill zone. Again, we've got that 1 hour premium fair value gap. The CE was hit. Now what are we seeing over here? We've got some nice consolidation, right? So if I outline it like this, the AMD schematic, right? We've got accumulation, then we have a manipulation inside that premium array, and then distribution happens afterwards. So once that manipulation has happened, we're gonna wait for what? A market structure break, right? Which is down here. So we can see this last swing low is being violated, and afterwards we should respect all up close candles. So over here, outlining those up close candles, right? We've got an order block over here formed after hitting that premium array. Price is breaking structure, and then the next set of up close candles which dig into that order block entry over here form a propulsion block. So that could be another entry once price retraces back into that propulsion block. And over here we've got the executions as always. Entry on the order block, taking a partial. This was pre-news, so taking a partial before the news is always good to do in my opinion. And then price expands lower, and then we clip that $4,000 on that new funded account. So I hope you enjoyed this video and you learned something. If you did, make sure to hit that like button and subscribe for future content. All the links are in the description. And my name is the OT Trader, and I wish you all a very splendid day.